So the best week of 2025 so far. The Sensex and Nifty have finally managed to reverse the downtrend, gaining 2% after 3 weeks of losses. This week, the mid-cap index was the story. It's up 3%. Small-cap index up around 5 to 6% as well. All sectoral indices ended in the green this week after the recent sell-off that we saw. The big question, can bulls maintain the winning momentum? Too early to say whether bulls have fought back, but early enough to say that bulls have clawed back to see another week. I'm Mangalam Malu. This is Editors Roundtable on CNBC TV18. And with me, Nimesh and Nigel, an all-boys team, and importantly, all of us, boys in blue.
Boys in blue and cheering for the India team, right? I mean, and it's become consistent now that we come to the semi-finals and the finals. We've been lucky with the T20 World Cup. Now, hopefully, fingers crossed, we'll win the Champions Trophy as well. So that's a big thing. And we've been the most consistent team as well, right? So in a way, we deserve to be in the final. Hopefully, we win the final as well and we cross the line. So fingers crossed.
I thought when you said we've been the most consistent team, I thought you meant right? All of us. We've been consistent in cheering for our squad as well.
Absolutely, and not only from a cricket parallel, but even from a research point of view, or from a editorial point of view, we've been consistently delivering day in day out, whether it's cement or metals or you covering FMCG. It's like we're bang on with all the news and all the reviews. So pretty much parallel to what the India team is currently.
The boys of our team have said it, bang on. He's just gone down the Yorker. But our boys, Nigel.
Our boys, yeah. I mean, they found their form on Tuesday. And I think the markets as well from Tuesday onwards, the last 3-4 trading sessions have been quite good, actually. Because we were getting used to underperforming. But after a while, the index has done well. The Nifty was higher. The breadth of the markets, mid and small caps, are about 3 to 5% in a single week. And what's more is we outperformed the US markets, the Shanghai market, the Korean market. So good going. After a while, we could say that we are in line or a little bit of an outperformer. Hopefully on Monday morning when you come back, the markets continue their journey and hopefully we have the trophy as well.
Hopefully we have the trophy as well. And we're not the only ones cheering for Team India and cheering for the markets along with, giving research and insightful news stories to our viewers as well. Today we have with us joining on the show is Harsha Upadhyay, who's the CIO Equity at Kotak Mutual Fund. Harsha, we wish you were here with us in the studio, but we'll just come to you in a bit. I hope he's not wearing his India jersey yet, but I'm sure on Sunday he will be cheering as well. But before we come to you, just a bit of a brief on the market itself. Like we pointed out, it's the first winning week that we've had in three for our markets. The bulls have clawed back, and a bunch of things that really stood out for me. One, the Nifty is gained after 3 weeks of losing. Secondly, all sectoral indices, all of them have been in the green itself. Mid and small cap indices, they've done a lot better. Even as the Nifty has gained about 2%, the mid cap index 3%, small cap index 5%. Portfolios are feeling a lot better. Even on days when the mid cap index at an index level were lower, something like Friday as well, there were more stocks advancing than the number of stocks which were declining. Try to find out some of the reasons why, we saw a bit of a rally. The most important one is finally we saw some stability or maybe some decline in the dollar index itself. So there was some stability in the rupee. Then the street is coming to terms with Trump's tariff plans as well. Be as volatile as they were, everyone's believing that maybe at some point, there would be some rationality that would prevail. Recovery from oversold levels. 5 months of decline that we've seen, 10-day losing streak for the Nifty. FII selling in the cash market reduced as well. And Reliance, the big boy towards the end of the week, picked up pace as well, up 5%. Top gainers on the Nifty, we had BEL, Tata Steel, BPCL, Hindalco, Eicher Motors, all of them do well. Eicher Motors, of course, reported good numbers for February as well. And we had on the way down, IndusInd Bank, which was underperforming. There is an overhang out there, the RBI approval for the leadership coming in out there, and weak numbers for the monthly sales coming in for Bajaj Auto and Maruti, both were the top Nifty losers. But the real dhamaka was in the mid and small cap space, where you had Bharat Dynamics. After a long time, we saw PSUs and defense stocks, all of them come back. Metals as well. The metals index was actually the best performing index this week. But on the way down, we had Kalyan Jewellers, which did not do too well. We had BSE. A lot of these capital market plays came in for a bit of sell-off, perhaps because of market weakness, perhaps because of NSE's own, announcement itself. BSE was down 9% this week. We saw some weakness in names like Anand Rathi, MCX, Angel One as well. But Gensol, that was really the stock of the week when it came to declines, 41% lower this week. So debt-related concerns. Let's end on a high note. We have names like Triveni Turbine up 22% this week, Chennai Petro up 17%. Decent gains for names like Castrol India, Welspun, Inox Wind as well. Next week, what do we track? We track the US jobs report, global developments over the weekend, because you get a lot of them. And any sign of NAV propping as we move towards the end of the financial year, Nimesh?
Well, Nigel, Mangalam, frankly, what all you pointed out was pretty much bang on, that these were the few reasons why market have seen a pullback. But I'll tell you, largely, it was oversold. There was a lot of pessimism in the market. Everybody was so much scared about buying anything or just looking at when I'll get a chance to exit. So that pessimism was so high that a pullback was pretty much on the cards, and it did bounce back. And if you remember, a couple of weeks back, I did highlight that at the margin, some of those high-frequency data has turned positive. Okay, and which you guys have been pointing out as well, right? A lot of the sales data, the auto sales data, or the consumption of fuel,
power demand,
power consumption or fuel consumption, at the margin, some bit of data was improving, and that probably got reflected in the pullback as well. Having said that, I mean, you spoke about mid cap and small cap up 5-6%, but in the context, the indices are down 25-27%. So it's a small pullback from an extremely oversold. I don't think we should get carried away. Next 2 weeks are going to be crucial, but I guess the bigger trend will come April 1st, because then we'll get to know about the tariffs from the US on India, and also the quarterly earnings will be very important, because now it will separate the men's out of the boys. So only companies which will deliver earnings will see the rewards going forward, and the rest will not do that well.
Which is why, to say bulls haven't fought back yet, or they aren't back yet. They've just clawed back to survive another week.
Well, on the tariffs front, Monday, tariffs will be implemented. Tuesday, we'll think about it. Wednesday, no, they're going to be implemented. Thursday, let's think about it again. But Saturday and Sunday, go and play golf or play cricket. Harsha, how are you feeling about the markets? There was that point out there that came in that India has underperformed. The Nifty had corrected by 15%, and the macro tailwinds were moving in our favor. For emerging markets, a softer dollar index, and from an India market perspective, softer dollar, softer crude oil prices. Do you think the near-term bottom, at least on the Nifty, has been made? Say 21,500, 21,800 on the Nifty could hold out?
Good afternoon, Nigel. I think clearly markets have been oversold, and in terms of valuations as well, there is a lot more comfort on the large cap valuations now after this recent correction. And as you rightly said, there have been few positives on the horizon as well. Crude oil prices have moved towards that $70 mark. There is an expectation that OPEC will increase the production, which means that most likely you're going to see lower levels for the next few months. That should be margin accretive for most Indian corporates. We have also seen some pullback in terms of the dollar index. The dollar strength has not remained the same, which means that the currency volatility, which would have been one of the key negatives for many investors, especially foreign investors, is unlikely to be as negative at this point of time. So yes, the markets were very oversold, and we have also seen a couple of small positives emerging. And if that gains strength, then that will be good for markets in the medium term. However, same thing cannot be said on mid and small caps yet. I do believe that the 4 or 5 weeks of correction, which was more than large cap corrections, cannot really remove the entire excess valuation that we have seen such a long period. So to that extent, I would still tilt towards large caps at this point.
All right, tilt towards large cap at this moment. The old adage in the stock market is sell in May and go away. But that's not what we're talking about today. Is March a good time to buy stocks? According to data from the last 5 years, perhaps seems to be the case. But we're not the experts on that. Nimesh is the one who's done a fair amount of data crunching, a lot of years. Why don't you march forth to the wall and tell us about what to do?
Well, Mangalam, there is a saying in the market, right? When there is so much of fear, one needs to be greedy to make money in the market. And that's exactly what the data suggests, that is March a good month to buy for a good rally in over the next 6 months or 9 months from there on. So let me just put that in terms of context and in terms of data as well. The question is March the good month to buy? And the historical data do suggest that it turns out to be a good month. So look at the Nifty first. The Nifty returns over the last 5 years. In the last 5 years, the average, the March return has been pretty much flat or negative. Okay, 1%, 0.5%, or minus 23%, but that was a COVID year. And look at the corresponding returns over the next 9 months, between March to December. 24, the Nifty was flat in the month of March, and it gave up 6% returns. In 23, it was again flat, 0.3%, and it gave 25% return. 22 was a bit of an outlier. It actually gained 4%, and hence it didn't give any returns in the remaining 9 months. But same with 21, just 1% up in the month of March, and it ended up getting 18%. I'm not counting 2020 because that was a COVID year. That's the Nifty. Similar is the case with the mid and small cap indices as well. This is the mid cap index over the last 5 years and the corresponding 9-month returns. 24 was a flat to negative year. You see the return over the next 9 months. Same is the case with 23 as well. It was pretty much flat in the month of March, and the kind of return was 53% over the next 9 months from there on. Again, the only thing is in all these charts, when there's a positive month in March, you don't end up getting too much of returns over the next 9 months. So that's an outlier there. And again, 2020 was an outlier because of COVID year, minus 24% in that single month, and it ended up getting big gains there. Similar is the case with BSE small cap indices as well. Look at the last 5 years of monthly returns in the month of March and the corresponding returns over the next 9 months from there on. Minus 5 to plus 28, minus 1% to 58% return over the next 9 months in 23 as well. Again, 2020 was an outlier, minus 30 to plus 88. So that's the kind of return we get over the next 9 months when March turns out to be a bit of a softish month. Now what has happened is after the correction and the kind of pain we've seen, some brokerages have turned constructive on the Indian equities from a valuation point of view. Amish Shah of Bofa Securities wrote a note this week, and he said that he's turning constructive at least on the Nifty, and they have a year-end target of 25,000. However, they remain bearish on the mid and small cap, largely from a valuation point of view. So that's Bofa Securities. Even Mahesh Nandurkar of Jefferies has written a note, and it's an interesting thing, right? I mean, after the correction, he believes that the India's valuation to MSCI EM is back to 10-year average, and normally we've seen from those levels, market tends to bounce back and give both absolute as well as returns over the next few months. So that's the reason why a lot of people are turning bullish. Now that's a big call. Now I'm turning to some of the micro stocks, which is the individual stocks, where in the last few weeks you've seen a lot of upgrades coming in. The first on my list is Reliance Industries. Look at the Macquarie note today. Macquarie put out a note, and for the first time in 4 months, in 4 years, Macquarie has turned positive on Reliance, and they put out an outperform rating. Even Kotak Securities has recently upgraded Reliance to a buy now, and they both believe that the risk reward is now favorable after the recent correction. The potential upside, according to the consensus, is close to 32% from Reliance from here on. So that's one big micro call. The other big report where there was upgrade was on the defense name. So, or maybe for the capital goods stocks. Kotak Institutional Equities, they believe that after the recent correction, it's time to bet on capital goods stocks. They actually upgraded Carbon Universal and Praj Industries to buy, and they've upgraded ABB and Thermex to add after the recent fall in those stocks prices. So that's Kotak Securities talking about the capital goods stocks. The third would be, again, Citi has put out a note this week on SBI. They've actually done a double upgrade on SBI to a buy from sell, and they believe that valuation after the correction is inexpensive, and they expect a potential upside of close to 25%. That was, again, a big upgrade coming there. And next is, again, a stock called Lupin. Even on Lupin, there have been a couple of upgrades coming in from the likes of Citi and Equirus. Both have upgraded the stock. They believe that the US launch momentum is going to be quite strong, and after the correction, valuation has become attractive according to those notes. So that was Lupin. Even the other big sector was EMS. We've seen massive correction in the EMS stocks, but after the correction, Investec put out a note this week. They've upgraded Sirma and Keynes to an hold, and they believe that the valuations become quite decent after the recent correction, and they prefer Ember and Dixon Enterprises in the EMS space. Similarly, CLS has put out a couple of high conviction upgrades, and one which stands out is Varun Beverages. They upgrade the stock to high conviction outperform. Target price of 770, a potential 70% upside from current levels. And even they believe that the risk reward is quite compelling after the recent correction. Similarly, CLS also put out a note on PFC, Harisi, again, upgrading both of them to high conviction outperform ratings. Even there, the correction has been quite sharp. And if you look at the target prices, most of them are pretty much bullish, and the upside targets could be between 50 to 70% on the strikes like RSC and PFC. So again, big upgrades coming there. And lastly, there was a Nomura upgrade on Alchem as well. Even there they believe that the underperformance was unwarranted, and after the correction, it's become an attractive buy at current level. So there was an upgrade on Alchem as well. So as I said, if you look at the historical data, if March has been a weak month, that's when one should buy, because when you buy the fear, that's the time you have to be greedy and you make good returns there.
Take that point, Nimesh. Incredible data piece when it comes to the returns after March. From March to December, every time there has been a negative performance in March, you perhaps end up making more money as well.
And just one more point with regard to the broader markets. You know, we saw this trend of very, very soft, extremely soft Jan to March period. Even in 2016 and 2011. From 2016, the mid and the small cap index saw a super rally post that. We had a very soft period. But in 2011, actually, it went down from there. So I think what most experts believe that this is a 2016 kind of scenario where we'll have better times after getting an absolute punching in the first quarter of the calendar year.
All right, so let's bring it to Harsha itself. Harsha, you know, you said large caps is something that you're favoring more than mid and small caps. Well, it's very next to impossible to time the market, so to say. But between March and December, we have 3 quarterly earnings. A lot of people have written off the fourth quarter earnings. What's your sense? Do you think the worst of earnings is behind us? What kind of earnings growth are you penciling in? What sectors lead that?
Mangalam, I think sequentially earnings should improve, at least for the large cap basket from here on is what we think. However, as you rightly mentioned, the fourth quarter earnings may not be too different than the third quarter earnings. So very unlikely that the next earnings season is going to give a very large positive a momentum to the market on its own. However, I think going into June and September quarters, we should be able to see a better earnings growth. And also we are seeing, as we discussed, a moderation in terms of crude oil prices. And with a lag, that should impact positively in terms of the margin profile for many of the manufacturing companies. So our take is probably you will end up with 12 to 13% kind of earnings growth for financial year 26, which is definitely a jump from where we are this year in terms of earnings. So yes, I think over the next couple of quarters, gradually you should start seeing a better earnings trajectory. And that's when I think markets would also start to follow that earnings moment.
All right, we will take note of that, Harsha. Just hold on. We take a short break, come back, continue to decode this week's market action on the other side, speak about an important sector, but more importantly, also get everyone's views on the game that is there on Sunday.